If you are a short-term trader, I would definitely be careful on the month of September. I'm going to share with you why it's probably not the most bullish month ever, okay? But I'm also going to share with you my thoughts on the market going forward. And if you've been following me at Sir Crypto Tips or at learningcrypto.com, where I share my thoughts on the market, my portfolio, and our trade alerts, you will know that I've called for this dip that we just had. I actually made many warnings about people for the last 4 days, actually, telling people, hey, listen, don't be surprised if we do go back down to the high to mid $50,000 range. There's a lot of people who said it ain't gonna happen. We're up only now. Well, these people are gonna learn time and time again that no, we're not going up only. Not only did I say that, but I also proved it that, listen, open interest is still kind of high. We just had a dip in the amount of leverage in Bitcoin, and that is very good. You want to see open interest at a low level, but the amount of leverage that had gone into the Bitcoin space was just a little too much. And we also had $1 billion of liquidations today, which was fantastic. That's what I wanted to see. I want to see these leverage gamblers just absolutely destroyed, and also I want to see these shorts getting destroyed as well. So both sides, I'm not just a leveraged long hater, I'm a leveraged short hater as well. And if you know me, since 2012, I have been buying spot and holding. I don't trade, and I'm doing better than most of these influencers out there by far. First off, I do want to commemorate Hal Finney. If you don't know who Hal Finney is, I'm not even going to say who he is. You should know this if you really want to learn about Bitcoin. I'm going to have you do your homework. But 10 years ago today was the first Bitcoin recipient, Hal Finney, passed away. And he was actually cryogenically frozen. So maybe someday they will come out with technology that he will be able to live amongst us as, once again. I would love to actually meet the guy. The guy's a freaking hero. And if you wanted to find out why Hal Finney is a hero, check out Heidi's book, Why Crypto. You can find it at shop.learningcrypto.com. Okay, moving on, we have more information on the Telegram founder. France just lost $10 billion in one day because the UAE has paused buying fighter jets, 80 fighter jets from France because of what has happened with the Telegram CEO. So that's actually really good. There's at least some fight back with free speech, and it's kind of crazy that it's coming from the UAE. Moving on, we have Binance under fire for allegedly seizure of Palestinian crypto assets at Israeli behest. What is the moral of the story here? I'm going to stay completely out of that mess, but I just want to say that it's important for everyone on earth that isn't a government to go ahead and keep their own coins on a hardware wallet or off an exchange for the majority of your funds. Yeah, sure, you may want to trade your with some funds on Binance or whatever, but keep in mind that that is dangerous, and you can see what can happen very easily if you are born in the wrong place. As you can see right here, I definitely am a proponent of keeping your coins in your possession with a hardware wallet. Let's cover why September could be a bad month for crypto. Okay, so this is from Lark Davis. He says, September has historically been the worst performing month for Bitcoin. In the past 10 years, we've seen a positive return just 3 times. So check out this graph right here. As you can see, this is what happens usually in September. It is usually a very red month. So this bull market is a bit different because we did go to all-time highs before the halving. And that is really important to understand, that we have a different player in this space. So I wouldn't say it's completely retail driven. This is more institutional driven price action. Plus we also have institutional whales, which love to manipulate the price, and that is why I keep looking at open interest. I keep looking at different metrics to see where we are in the Bitcoin cycle. So typically what we see is, once again, from what I've said on prior videos, is that once we do hit around 130, 150, 160 days after the halving, that is when we really bust out of the range that we've been in, because we've been in this range for now 6 months, so half a year. And post halving, we've been in this range for about 136 days now. I think it's, to be exact. So yeah, I'm not worried one bit. This is only, I'm just warning people that are just short-term traders, not long-term traders. If you are holding spot out of leverage, you are freaking golden, guys, okay? Golden. So anyways, if you do like this t-shirt, by the way, check it out at shop.learningcrypto.com. That's all I have. Like and subscribe. Talk to you guys soon.